to students, faculty, and community members. The Entrepreneur's Edge series aims to highlight the College of Business's commitment to entrepreneurship and innovation. Maybe I should say I'm Manny London, by the way, the Dean of the College of Business. This series highlights the knowledge and experiences of major entrepreneurs and executives on Long Island and in the New York metropolitan region and beyond, for that matter. The series is spearheaded by Bruce Newman, CEO of Protegrity Advisors, a firm that specializes in mergers, acquisitions, and valuations of mid-sized businesses across Long Island and abroad. So thank you, Bruce, for assisting with this evening's event. And thank you to Maria Fry, President of Executive Consultants of New York, for assisting with publicity. Much appreciated. The College of Business has experienced a major growth spurt during the last 10 years. And one of our key goals is to contribute to economic development on Long Island. Our students work with startups in the business incubators, on campus, and in the region. Our program this evening explores the experiences of a major entrepreneur and business leader, Pablo Legarreta. I want to thank Jim Komisinski for introducing us to Mr. Legarreta and suggesting this program. Jim is an entrepreneur and supporter of the College of Business and sponsor of our Social Entrepreneurship Prize. Thanks as well to Marie McCallion, Kristen Matthews, who's of the Alumni Association, and Cheryl Mazurowski of Campolo, Middleton, and McCormick for helping to coordinate this event. Joe Campolo will interview our distinguished guest, and Joe will formally introduce Pablo. So I would like to say a word about our distinguished interviewer. Joe Campolo is the managing partner of Campolo, Middleton, and McCormick, LLP, a Forbes top corporate law firm in America. Joe's discipline, direction, and focus have made CMM the fastest growing law firm in Long Island's history, rapidly expanding in size and influence. Joe has been named the best lawyer on Long Island multiple times in a row and is described by the press as fearless. In addition to growing his own businesses, Joe has kept an unyielding focus on growing the Long Island economy and investing in the community because he knows that good business is good for everyone. His insight and no-fear attitude have led to some of the most significant economic initiatives on Long Island today, including spearheading the studies that made the Long Island Innovation Park at Hauppauge a household name. Joe is also chairman of several firms, Protegrity Advisors that I mentioned earlier, CMM Coverage, a full-service insurance firm, and Moving Forward Strategies, a corporate training firm. As chairman, Joe ensures that these companies, which he started or acquired, provide the same quality of services that the business community has come to expect from CMM LLP. Joe served honorably in the United States Marine Corps and is a graduate of Stony Brook University and Fordham Law School. Joe also writes a popular blog called Off the Record, where he connects with the business community. So please take a look and catch up on Joe's blog at joecampolo.com. So at this point, thank you in advance to Pablo and Joe. And now I'll turn it over to you, Joe. Thank you.
Thanks, Manny. And I want to thank you and Bruce and the entire team at Stony Brook for helping put this together. It's been 30 years since I was a student at Stony Brook, and the remarkable accomplishments of the university are pinnacled here tonight with the fact that we are able to attract such talented CEOs and entrepreneurs to come to speak to our students and our faculty in our business business community. I'll give Pablo's formal bio in a second, but I will say that over the past few weeks, he and I have spent a lot of time talking on the phone and getting to know each other. And he exemplifies an entrepreneur. Entrepreneurship is the most important asset a company can have, and it's captured nowhere on the balance sheet. But this man is an amazing entrepreneur. And
could you plug in your phone right there for me?
Alex, can you please mute your
Alex,
phone?
just mute out, Alex.
Thank you.
Alex.
And I think what we're going to learn tonight is how innovative and groundbreaking a man he is. Entrepreneurs look at something and they don't say why, they say why not. And his story is going to exemplify a man who was able to look at an entire industry and say, why can't we do it this way? And then go ahead and do it. And he really revolutionized, biopharma for generations to come. His formal bio, Pablo has over 20 years of experience in investing in pharmaceutical royalties. And that's something that I never really thought about until I met him, but it's a fascinating topic that we're going to talk about. And building and managing Royal Pharma PLC, a publicly traded company on the NASDAQ exchange at RPRX, a rapidly growing biopharma company that is today one of the largest dedicated life sciences investors in the world. Prior to founding Royal Pharma in 1996, Mr. Legarreta was an investment banker at Lazard Frères in Paris and in New York. Mr. Legarreta is also a co-founder of Pharmacon Advisors, a leading provider of debt capital to the life sciences industry. And he serves on the board of directors of Epizyme, a publicly traded company on NASDAQ EPZM, and on the board of governors of the New York Academy of Sciences, as well as the boards of trustees of Rockefeller University, Brown University, the Hospital for Special Surgery, Pasteur Foundation, the US affiliate of the French Institute Pasteur, Open Medical Institute, and Park Avenue Armory, all incredibly prestigious organizations. And Pablo, I want to welcome you and thank you for taking time out of your incredibly busy schedule to share your knowledge, which is a wealth in and of itself to the Stony Brook community. So the first question I want to ask, right, is to explain to everybody exactly what it means, right, to be an investor in biopharma royalties. What does that mean? Because I'm sure the audience is wondering what it is, and it's brilliant. So if you could just explain that to start, and then we can talk about how you built an entire empire around that.
Sure, Joe. And before I do that, I'd like to first just say that it's a real privilege to be addressing and speaking with MBA students at Stony Brook and students that are interested in entrepreneurship and innovation, which is one of my passions. And also thank you, Joe, Manny, for this invitation to speak. Jim, who introduced us to you. Turns out that Stony Brook is actually very well known to me because there was a very important drug that was discovered, invented actually at Stony Brook by Barry Kohler, that was really important in cardiovascular disease, one of the first antibodies ever approved to treat cardiovascular disease, reocclusion and angioplasties. And I went to visit Stony Brook probably about 20 years ago to talk about potentially acquiring the royalty from them. So thank you for the invitation to be with you tonight. And I'll now answer your question about what we do, which is very unique, by just giving you a little bit of background on, life sciences, how research is done today, the very significant changes that have occurred in life sciences. And maybe if I can ask to have slide number 9 on the screen, that will give you a little bit of color of what's happened. So if we think of how drug discovery happened many, many years ago, maybe 30, 40, 50 years ago, it was all driven by big pharma, companies that would do everything from basic research through the commercialization of products. And a lot of this started to change, I would say, after World War II, when NIH, the US Congress, in fact, decided to fund medical research by funding NIH, which, as you know, the National Institutes of Health then has a budget, significant budget. When I started Royalty Pharma almost 25 years ago, it was $14 billion per year. Now it's about $40 billion. And that money, which goes to NIH, then is given 90% of that to scientists all around the country in grants that are 3 to 5 year grants, so that inventors, scientists that are working at places like Stony Brook, do basic research, advanced science, innovate, and find cures for very important diseases that are afflicting humans. But what happened is that over the years, the whole ecosystem changed in a very dramatic way because as NIH started to fund research at academia, as you can see here, the ecosystem changed from the fully integrated pharma company that would used to do everything from basic research to a much more dynamic, more entrepreneurial and rich ecosystem where you have now governments and academia that get involved in the early stages. There's about 5,000 or so labs that are in academic institutions, some research foundations. They do the early stage research, things get discovered, but then they're transferred, licensed to biotech companies, which are responsible for the early stage applied clinical development. They start to do the preclinical work, but eventually get drugs into human clinical trials. And they do phase 1, phase 2. And then often what these biotechs do is that they look for an agreement, a license with a big pharma, because it's really big pharma that has the worldwide distribution of products. And there's obviously today very few big pharmas. It's less than 20 in the US. It's actually like, 8, 10 big pharmas, and then you have some in Europe. So this big companies have become the marketing arm of the industry. But a lot of the innovation in the ecosystem is really happening at academic institutions and biotech companies. And as you can see by the numbers, it's more than 10,000 entities between academia and biotechs where all of this innovation is taking place. Now, what happened is that I started to realize when I came to the US in the early 90s, after being 3 years in Europe with Lazard, that there was a lot of innovation at academia, patents, discoveries that had been licensed to biotech. And as a result of that, the academic institutions had a royalty in a product. And if you can go to slide 11, I'll show you very quickly a case study so that this is very clear. So in this case, Memorial Sloan Kettering discovers a protein that is in our bodies, filgrastim, that is responsible for the stimulation of white blood cell production. In cancer therapy, when a patient gets chemo kills cancer cells, but it also kills our white blood cells, and we become neutropenic. Patients can become hospitalized just because of chemo. And when you give a patient chemo and you give them also an injection of Neupogen or filgrastim, you counter the negative effects of chemo. So this became a very successful drug developed by Amgen, that sold at its peak, $6-7 billion worldwide. And as a result of the invention, Memorial Sloan Kettering was entitled to royalties on the sales of this drug. There was also technology that was developed at Columbia and Stanford and UCSF that was used to develop biotech drugs and used in this particular case. And as a result of that, those institutions also receive royalties on the sales of this drug. And if now we go forward one slide, you can see that this drug got approved in 1991 by FDA and launched by Amgen. And what happened was that in 2003, many years later, I approached Memorial Sloan Kettering and suggested that I wanted to buy, made a proposal to them to buy their royalty, Neupogen Neulasta, for about $500 million. They looked at the price, looked at the offer we made, and realized that selling 80% of it was very attractive to them. So we bought 80% of the royalty for $400 million. And if you go to the last slide that I'm going to show about this case study 13, you will see what was the driver here. Why was this done? And essentially, MSK at the time had an endowment, very well diversified, invested in stocks, bonds, real estate, like a prudent managed endowment is invested in, that was worth about $1.6 billion, but they had a single product royalty marketed by one company that was worth about $500 million. So huge concentration of risk because 25% of the financial assets of the institution were in one drug. So by selling us the royalty, they diversified, but they also funded a building that is now up in New York, 21-story building where Memorial Sloan Kettering has their scientists. That's where the research that is taking place today at Memorial Sloan Kettering is happening. But they also were able to fund research in a more accelerated basis, put that money back into more cancer research. And then the third thing that happened was that it occurred to me to offer Memorial Sloan Kettering to invest in Royalty Pharma equity. With a $400 million, I said to them, why don't you take equity in Royalty Pharma? Their initial reaction was, why would I do it? I'm selling you a royalty. And I said, you should do it because we have a diversified portfolio, more attractive. And also we keep on investing for many years. Your royalty, which expires in 2013, it was 2003 when I had that conversation, and the royalty had only 10 years remaining. it will go to zero, the 20% you keep. But if you invest in Royalty Pharma, you're going to get dividends for many, many more years. And they did that. They became our partner. It was great for us because it validated our business. They became our shareholder, but also they benefited from this win-win transaction. And I'll stop there, Manny, with that background on our business that maybe will help the students understand better what we do.
Yeah, so I wanna just simplify, because if I can understand it, then I know like a fourth grader can understand it, right? So traditional investors or traditional funds will find stock or bonds to invest in, and it seems like what you did was look at these institutions that have these potential royalties that could come if their drug gets successfully commercialized. Right, and you are able to take risk off the table for them by acquiring a portion of those royalties, give them necessary capital that they need to reinvest into what their mission is. You then are able to trade on that risk and make some profit off of that and have them reinvest back into your company. Is that basically the model as to what's going on?
You got it perfectly right. When we started this, it was a very new idea. It had never been done. But what I realized, there were other things that were done. For example, there were securitization of other assets, financial assets, like credit card receivables, mortgages. As you know, people create portfolios of mortgages and securitize it. And what I realized was that there was this incredible asset class that was growing very fast because of the funding of NIH over decades, and that there was all of this innovation accumulating at academic institutions, and that there was maybe an opportunity for someone to go in and monetize these assets, providing that liquidity that these institutions, could see as valuable to, as you said, fund the research, fund buildings, as you see. And we decided to do it, and it was a novel idea, never been done, but obviously after 25 years, it has paid off because it has become a very big asset class.
I think it's brilliant. I think it's absolutely brilliant. It's what I love about entrepreneurs is they find these opportunities and solutions. So how do you evaluate, how do you analyze what a good investment is versus a not so good investment? How do you do that?
It's actually tricky. And maybe I'll just also very quickly mention just a couple of things. You and I were talking about the challenges that one often faces when you start something new. And for example, in my case, it was so novel that I decided to start by, taking the list of NIH grants, the money that NIH, the yearly money that they distribute to all of these institutions, and go and talk to all of these academic institutions, starting with, the top of the list, institutions like Hopkins and MIT and Stanford and Harvard. And we did it with a team, going knocking on their doors, educating the tech transfer offices at academia about these assets, and essentially making them aware that they were financial assets that could have been monetized. There was huge, skepticism initially about whether they should do it or not. As you know, academics are generally very conservative, but eventually we succeeded. And this was the first big deal we did with an academic institutions, which took us 6 years. I went twice to talk to MSK in 98 and 2000, and we finally succeeded in 2003. So we had to just persist with this idea and try new ways of explaining why it was an attractive thing. But eventually it worked. How do we value the assets? Initially it was myself and a small team. Now we become, much more experienced. We lost money in some investments, so learn from lessons of what didn't work in those cases. But essentially today I have a team of, young entrepreneur. I would say entrepreneurs also like me, because it's people that have taken risk joining me with something new. But a lot of them have medical backgrounds or science backgrounds, may have studied, biochemistry, molecular biology, neuroscience, many kinds of, science backgrounds. Some of them PhDs, some of them even combined that with MBAs. And some of them actually started life as a research analyst at, Morgan Stanley, JP Morgan, following biotech companies and trying to do research on biotech companies and their products. And they are part of my team. And what we do is we look at a product and then we try to determine, whether the product has, things that make it attractive, differentiated, looking at the results of the clinical trials, to understand the efficacy of the product, the safety. And then we model out, 10-year model, maybe even longer, looking at, the drug as it is commercialized, what kind of penetration it can have. If it's a drug, for example, that's going to treat multiple sclerosis, is it better than what exists? Is it going to really provide patients with something really attractive in terms of, modifying the disease, for example? When you find those kind of drugs that have an ability to not only treat symptoms, but also to modify the course of a disease, those really become blockbusters. And those are the kinds of drugs that we're looking for. So we do a lot of diligence because, like we've done deals where we bought a royalty on a prostate cancer drug from UCLA for $1.1 billion as an upfront payment to UCLA. So we need to make damn sure that the asset is going to perform, because once we pay them, we have the risk for the next 10, 15 years. There could be new products introduced in 5 years that might knock this product out of the box, and then we lose money. So it's a very intense diligence approach. And then we negotiate with the holders, but we often try to see how we can make it a win-win by making them also a partner of Royalty Pharma and participate in our diversified portfolio of royalties.
Yeah, so it's genius, right? So you look at someone like Isaac Newton, and he's sitting there under an apple tree, and the apple falls, and he has this epiphany. And so here you are, and what I really want to understand is here you are, a very successful, young, aggressive investment banker that's on a great track to make partner at a well-respected firm, right? And yet you have your apple falling from the tree moment where you realize, aha. So talk about that. What was that moment like? What were you thinking? How did that all come together? Because that's the genius in all of this.
So when I worked, I studied in Mexico engineering, and I worked at a joint venture that Lazard had in Mexico. And I used to read, as an engineer, I had not a lot of knowledge about, medicine and biotechnology, but I used to read, the magazines that were popular at the time, like Fortune and Forbes. And I recall looking at Forbes and looking at these companies that had, market caps of $300, $500 million, no revenues, no sales. They were losing money. And I would ask myself the question, how is it possible that a company has no revenues, no sales, has been losing money for 3-4 years, and is worth $400 million? And I went to the CEO of this little joint venture that Lazard had in Mexico, and a Frenchman who had been sent from Lazard Paris. And I said to him, Jacques, how is this possible? Why are investors paying so much money for these companies? And he said to me, Pablo, that's biotech. That's the future. Those companies, if they're successful in developing a drug that can cure a disease, could be worth a lot of money, and investors pay up for that. And what was interesting then to realize that those were the companies like Amgen, which is now a $100 billion plus company, or Genentech, or others. And I looked at that, and that stayed in my mind. And I went then with Lazard to work in Europe, but then in '87, but then I came to New York in 1990, and I started to look back at biotech. And just remembering that little experience, or that observation, and I realized I looked at Amgen, and the product was about to get approved, and I invested in the Amgen stock, and personally. But then I realized that there was this partnerships that were created by another bank, Payne Weber, because Amgen's market cap was about $400 million, and they wanted to raise about $100 million, which was the cost of a phase 3 trial to get this drug that I talked to you about, that I used in the case study, Neupogen, filgrastim, that was discovered at Memorial Sloan Kettering. So they wanted to run the phase 3 trial. And at the time, the financial markets, the stock market was not deep enough to give Amgen, with a $400 million market cap, $100 million of capital. It was impossible to raise that amount. So what Payne Weber did was that they would place this partnership interests, limited partnership interest, in a partnership that was created to raise, in this case, it was 840 units in the partnership that were sold at $100,000 each. And they were sold to investors, kind of worth individuals, doctors, who would buy this unit because they were investing in Amgen. So they got equity in Amgen, but they also invested in the drug. They got a royalty of 7% on the sales of the drug. And when I saw those partnerships, I said, my God, this is very interesting, because if you buy this, you're going to have an interest in the top line, the sales of the drug, as opposed to when you buy equity in the company, you're buying the bottom line, the profits. Equity trades on the basis of profits. So I said, is it possible to buy these royalties from these investors, the limited partners who were high-net-worth individuals and also doctors? And I started with a $7 million proof of principle partnership, and we bought them, and it succeeded. And we invested about $10 million. A bank, give us a little credit, $3 million, because we started to have cash flow. And it worked. But what really happened was that it opened my eyes, the fact that I invested in that royalty. And then I realized, just reading documents, SEC documents that were, publicly available, that, the drug had been licensed by Amgen from Memorial Sloan Kettering. And I realized, well, MSK has a royalty. And then I started to dig in and look at others. NYU had a royalty in another big drug, Remicade. Stony Brook had a royalty on RioPro, which was one of the companies that I looked at the time was Centocor, which is the one that had the license to Stony Brook's RioPro. And I said, well, what if I went, and I started to realize then, looking at the funding of NIH, the amount of capital that NIH was given to academia in the US. And I started to realize that there were all of these assets in the hands of academic institutions. And I said, why not see if I can buy those royalties from the academic institutions? We already invested in the royalties from the LPs, and that was successful. So as time went by, I said, this is really interesting, never been done, but maybe there is an opportunity to create a business by, monetizing these royalties in the hands of academic institutions. And I arrived in the US in 1990 from Europe. I started investing in these royalties in 92, 93, buying the royalties from the investors that funded the partnerships, that funded the late stage trials. But then in 96, I decided to leave Lazard and start Royalty Pharma. I raised $60 million from very unusual investors. I tried to raise money from the typical pension funds, foundations, endowments. It was very hard. I couldn't raise a dime from those kind of investors because the concept was so novel. It was not like venture capital or private equity where there were already thousands of funds out there. This was, the first time ever attempt, anybody attempted to do this. So I went to very sophisticated investors, some of them that were in the pharma industry, others in oil and gas that had invested in royalties. And they gave me the $60 million and we were off to the races.
Yeah, so you said a couple of things there that I think I want to put a finer point on because they're so critically important. One is the brilliance of your business model, okay? Royalty payments are paid on revenues. And that's not something that should be easily lost in this discussion, right? It's brilliant. It's brilliant. You're paying on top line and you're making your return on that. Two is that you were able to raise $60 million from investors on this brand new model, which is not easy to do. I've spent my whole life trying to help businesses raise money. And three is you have to convince academic institutions and arrogant professors and inventors, okay, that you're giving them a fair value for their for acquiring some of their royalty. And doing that all is not really very easy to do, just knowing what I know, right? Yet you managed to pull it off in an incredible way. And I think that we should really take note as to how important those three points are. I want to talk about something we talked about going back. You and I shared a discussion about how Warren Buffett said that he had hit the genetic lottery and that you had felt that you had hit a genetic lottery in a different way. So go back for everybody and talk about your childhood and your upbringing. It's really truly fascinating how you got to where you are. Just talk about that a little bit.
Of course, thank you, Joe. And you brought up Warren Buffett, and I recall from after finishing college, reading his annual reports and really remarking how exceptional a human being and an investor he is. And in fact, you and I talked also about mentors, and in a way, even though I don't have a personal relationship with him, I feel that in a way, what he has written and the way he approaches business, he has served as a mentor to me. And I did mention to you that, one of the things that he mentions often is how he feels that, he hit the genetic lottery or jackpot, being born in the US in a free economy, with free markets and, all of this very interesting, economy that we have in the US, where you have competition, innovation, that are really the hallmarks of progress. What causes progress? It's innovation. There's no question about it. But going back to Warren Buffett, I also felt the same way. Why? Because I was lucky to have been born not in the U.S., in Mexico, in a family that was involved in finance. My family had been involved with a large bank, actually the largest bank in Mexico, Banco Nacional de Mexico, for over 100 years. And my great grandfather and then grandfather were involved with this bank, but my father was one of five, and in his case, he, the older brother decided to, go to the bank and became chairman. So my father decided to take a completely different direction. Was not interested in finance. Was not interested in living in Mexico City, where this bank, the headquarters was, and he went to a small town where I grew up. But I was lucky to have been born in Mexico in this family. And my father, I look back at him and see him also as entrepreneurial. My mother also, both amazing mentors, because where I grew up, small town, when they moved there, which is more or less when I was born, this town had not great schools, even hospitals. And I recall growing up with my parents, who actually decided to build a school, because there were in a primary school that I went to, and it was with American Canadian teachers. So I actually learned how to read and write in English before Spanish. I obviously spoke Spanish at home, but I learned how to read and write in English. And then as me and my brothers were growing up, they built another school, then, sort of middle school, high school, and eventually even a university. My mother decided that, the town needed a good university. So she went and talked to the Tech of Monterrey, which is the equivalent in Mexico of the MIT, convinced them to build a campus in Cuernavaca, where I grew up, so that if we wanted to go to a university there, we could. I decided that I wanted to go to Mexico City, went to a university in Mexico that was, a Jesuit school, a little bit like Georgetown in the US, studied industrial engineering there, and moved to Mexico and did that kind of schooling. But just reflecting on my past, I feel I was really lucky to be born where I was born, and the opportunities that presented to me. And I was also lucky to have had parents that also really instilled in myself and my brothers this idea that, you have to do something in your life. You have to give back to your community, which I saw in spades in my parents that built, schools and hospitals, nonprofit organizations that really improved the area where we lived. But also lucky because, I was able then to, through just, hard work and focusing on things, find a job that eventually took me to work for Lazard. And I think, obviously the way Warren Buffett, sort of approaches this, he says, I was born in just, an incredible point in time and in an incredible environment. And, obviously it would be very different if you're born in Africa or somewhere else. And so I think I really won the genetic lottery myself also.
Yeah, I think it's a great point. And I love the entrepreneurship, especially of mom, who decides, hey, the schools aren't where I want them to be, so we're going to create our own school. That's a true entrepreneur. You mentioned the word mentors before, right? And it's something I want to explore a little bit with you. My own career, I can map out in my mind. I had a great mentor when I was in the Marine Corps. I had a great mentor at Stony Brook. I had a great mentor at Fordham Law, and so on and so on. And so once you were at Lazard and you had gotten, such a great business and entrepreneurial experience with your parents, What was the role of mentors for you moving throughout your career?
I think for me, there have been many mentors. Some that I actually have interacted with, very closely. My parents, obviously, my grandfather was another one who did incredible things throughout his life. Mexico went through a period of industrialization after World War II, and he was able to, participate in that process through the bank, bringing to Mexico a lot of amazing businesses that did not exist in partnership with, companies all around the world. And just watching that and what that did in the country was really, really interesting. But in addition to sort of the family mentors, I've had many others. Working at Lazard was an incredible environment. It was a very unique institution, and not many exist today like that. It was a partnership, as opposed to the bigger banks at the time that were, sort of publicly listed and traded corporations like a JP Morgan or a Bank of America or others, Citibank. This was a partnership with, an incredibly competitive environment. At this place, you really had to, perform, or you were out the door. And also, one very interesting thing that Lazard had that other banks didn't is that it had a completely inverted pyramid, as opposed to having the typical structure where you have a lot of generals and fewer captains, lieutenants, more captains, lieutenants, and then a lot of big army underneath. At Lazard, it was really an inverted pyramid, and I was very lucky to be able to, at Lazard in the 10 years I was there, interact and learn from just incredible financiers, people like Felix Rohatyn, for example, which is credited for saving the city of New York from bankruptcy in the 60s, or a man that a lot of people say he sort of invented M&A because he started to do this as a business. But there were many others that I worked with at Lazard. So I look back and I say it was just an incredible training for me. And it was a group of individuals that had this notion that you could take a problem and try to analyze it and break it up into its components, understand all of the different angles to the problem aspect, and then start to think of what are the issues, what are the drivers that are going to potentially solve this problem. So it was this very rational approach to business, this very rational approach to finance, where if you analyze things in a very detailed way, in a thoughtful way, you can come up with solutions. And then another thing that I find really interesting, looking back at my career, Joe, is that before coming to New York, I spent 3 years at Lazard in Europe. Totally different environment. It was the same firm. Lazard had 3 main houses, Lazard Paris, Lazard London, and Lazard New York. Very different people. But I was lucky to go to Europe in 1987 when the European Union was coming together. For example, Spain had just joined the European Union a year or two before I got there. And I was part of the mergers and acquisitions team of Lazard that was focused on all of the business that Lazard had outside of France. There was a local team that would do business in France and a team that would do business outside of France. So for me, what was fascinating was to interact with people from so many different countries. It was Spanish, Italians, Germans, Belgian, Scandinavians, and understand all of these different cultures and how people, looked at the world in different ways. And, like one of the things, just looking back, that was just an incredible contrast between the US and Europe is in the US, what's very common nowadays is for, young professionals, you go to college, you study business, you study engineering, you study physics, science, whatever. Many, do postgraduate studies. It could be an MBA, it could be a PhD. But, the academic system in the US is very rigorous. It's one of the best in the world, if not the best. But what comes out of the US academic institutions is graduates that all have a common language. So you do business in the US, in New York, in the US, and there's a common language that everybody talks. People know that even the words that you use, you know what a DCF is, what, a net present value, you know what, cost of goods, you have this training in business, and people speak the same language. So when you're working and interacting between two companies, and when I started at Lazard here, I was an associate, eventually a vice president. You interact with people, if you have a client and you're speaking the same language, and there's also a huge amount of data available for you to analyze things. It could be data about the company, about the financial markets, about the products. There's market share, there's volume data, patient, in my case, patient data when we look at things, but a lot of data. Now you contrast that with Europe, very different. And what's so interesting is that there's a huge emphasis put in Europe about when you're starting to do business, about getting to know the people on the other side of the table, the people you're going to do business with. Get to know that person, and it's very common to go and maybe have lunch or dinner, interact with them. Even before you talk about business, you want to get to know the other person, understand the person's motivations, the fears, everything. And you even do that even before you talk about business often. And that is, it happens because, the markets are incredibly different and people are, coming at things from different perspectives, but also because there's less data available. And maybe now things have changed, but obviously 30 years ago, it was different. But, so I learned a lot. You were talking about mentors, and I had mentors in Europe at the bank that I learned from so much about all of these little aspects, how, relationships are really important in other markets. And I looking back, the interactions I had with some of the partners at Lazard in Paris were really important in my career to really understand all of these different things that I'm talking about.
Yeah, it's great, and that diversity, I think, is so critical to get. And so, having had all those experiences and all the incredible accomplishments you've had, how would you describe your leadership style? Right? What sort of leader are you? I mean, sometimes engineers and scientists, become super micromanagers. Sometimes they're able to really be able to delegate. What's important to you as a leader, and how would you describe your leadership styles?
Sure. So, becoming a leader is something that I would say, I've learned it. It's actually, it's been hard. I remember starting in business, I was maybe a bit more shy and actually did not have maybe as much training as others have had. But, I was ambitious and, wanted to make a difference. And obviously paid a lot of attention to really analyzing and understanding, what people I respected, what they did, how they behaved, and how they operated. And obviously in business, I've been doing this now, being involved in business, for, 30 or a bit more than 30 years, you come across all kinds of people, and, you learn from them. And I think in terms of leadership style, one of the things that I realized early on was that, for me, what was going to be critical, I was very fearful of failure. I did not want to fail when I left Lazard. So for example, I started the business, by myself with the support of some partners, but I invited another individual to join me because I said, I need a partner. So, because I know I'm going to make mistakes. If there's two of us, and I have another partner, maybe by discussing things openly and sort of debating things, I'll make less mistakes. And I invited another individual to join me, full time, gave him a piece of the business, and I said, I don't care. He didn't help me start it, but anyway, it doesn't matter. I'd rather and I also felt that if I had a partner that I respected and was smart, he was going to help me make the business even bigger. So I did that. At the end of the day, things didn't turn out the way that I initially thought. He was a great partner, but he decided that he wanted to go back to biotech, and he started biotech companies, and he left me after 6-7 years. Great relationship, but I then realized that if I was going to succeed, it was going to be much more a team effort. So a lot of the emphasis at Royalty Pharma has been building a team and really focusing a lot on diversity. So for example, today at Royalty Pharma, more than half of the employees are women. We have, I think we at some point looked at this, and it's probably changed now because we've grown quite a bit in terms of staffing recently, particularly after we went public. But we have people from something like maybe more than 10 different countries, and obviously different races, and so it's very diverse. But in terms of management style, what I've realized is that what I tell people when they come and join me at Royalty Pharma, and I obviously have interviewed everyone that has joined the firm, and I think interviewing people is really critical, because one of the things that has been really important to me is the culture and the values, and which is very special. It's a very special culture, and I obviously want to make sure that as we grow, we preserve the culture. It doesn't change. It doesn't lose. We don't lose the culture we have. So integrating people and making sure that the people that join us really are gonna integrate well and adopt the culture is really important. But it's a very open culture where absolutely everyone that works at Royalty Pharma can speak up, and we always try to ask for their opinions on absolutely everything. And it's a culture also of sort of, what I tell people is there's no limit as to what you can do. You come, you work for us. Yeah, you might have a role when you join, a specific role and a title, but we're not going to limit what you can do. If you have ideas and you want to potentially try something, or you propose something to me or to others at Royalty Pharma, and you want to do something that is not in your role, you come up with an idea, just come and speak up and tell us, and maybe that's going to take this person in a different direction, or he might be doing things that are not under his role, or so it's incredibly open. And it's obviously also a business where we're making investments every year. So the investment process is another aspect of our business that requires a lot of discipline. And when we're evaluating investments, and I was telling you before about this team that we have of scientists, PhDs that look at the investments, what I've tried to do is to actually establish a culture of openness. And what we often do is we get the team that is doing the work, analyzing a potential investment where we're going to fund a trial for a company or buy a royalty from a university, and we've analyzed it. The team that does the work would get in a room and then present the case, the investment case, the investment thesis to the rest of the group, and we all participate, listen, and try to actually question the investment thesis, the assumptions, and push back, and really try to make this very collaborative, to make sure that every stone has been turned, and we looked at every possible aspect, every possible way we could make a mistake, lose money. So it's a very open, collaborative environment, and also one where I've tried to really push hard for constant innovation, constant creativity, because one of the things that I realized is that everything changes. There's nothing that, and particularly in the field we're at now in life sciences, with the amount of innovation that is occurring today, I often, when I talk about what's happening in life sciences, in academia and biotech, I refer to it as sort of the golden age of academic research and biotech research. And we're really living through that right now, because the amount, what's happened, Joe, is all of the investments that were made, decades ago by US government and other governments around the world, which did things like mapping the human genome, and other things, have resulted in this incredibly much more profound, more significant understanding of human biology. And so now, the research that is taking place at places like Stony Brook is a lot more driven by this incredible understanding we have of biology, and it has really fostered an incredible pace of innovation where many diseases will be cured. So everything is changing all the time, and we have to stay, obviously at the forefront of this change as a firm if we want to stay relevant, and as competition starts, because there's now competitors. We have Royalty Pharma has become a big company when you look at our market cap and other metrics, and that obviously invites competition. So we need to stay ahead of competition and keep on innovating.
Yeah, so time management and your own time management becomes really critical with all the things that you're dealing with. So what does a typical day in the life of Pablo look like, right? What is a typical, and I know there's no typical days, but what does a typical day in your world look like?
So you're right that there's no typical day, and now with COVID, it's very different. But what I would do before COVID, and a lot of that can be done today, but it's been done now. Like you and I are speaking with all of the students through Zoom. But it's a lot of fun for me. I love what I do, but it's actually there's a lot of travel. So traveling around the U.S. And the travel is a lot to the places where academic research, life sciences research is taking place. And there's 3 or 4 really important poles of research in this country. Obviously the West Coast, the area of San Francisco, Los Angeles, San Diego have become incredibly important in medical research, with amazing institutions, academic hospitals that do research, and then biotech companies. You also have the Boston area, which is incredibly important now in medical research, and then you have other places like Research Triangle Park, and Austin, Texas has become important. Texas also, but also there's a little sort of undiscovered or area of incredible research in life sciences, which is New York. And why New York? In New York is very well known because of its finance. You have it's the epicenter of finance for the world. But other things, advertising companies, they're all located in New York. So New York is known for a lot of things, but what people don't realize is that New York has some of the best academic research, with Columbia University, NYU, and others. Einstein, obviously, Stony Brook, and the whole State University of New York ecosystem. But other institutions, like I'm very fortunate to be on the board of Rockefeller University, which I really view as the crown jewel of medical research in the U.S. It's extraordinary as an institution. The amount of Nobel Prizes that it has, is really #1 in the world. But anyway, so a lot of travel to actually talk to scientists, try to understand what they're working on that is gonna there's in life sciences. There's something like about 30,000 diseases or conditions that afflict humans, and we have cures for about 20% of those diseases. About 6,000, roughly speaking, and these are rough numbers, obviously. And many of the treatments or cures that we have for many of these diseases are not ideal. There's a lot of room for improvement. So what I do a lot of is try to go and talk to scientists at academic institutions, to try to understand, what are some of these diseases that were not treatable before, because science had not progressed to the point where you could treat that disease. But now that science has progressed and now you understand how that specific disease is caused, if there's a defective gene or if there's something missing in the body that, our body's not producing. And now that we understand the mechanism of action, maybe that disease now becomes treatable. So this unmet medical need that may afflict, a lot of people, maybe millions of people or hundreds of thousands of people, this now can be, we say it's druggable. You can now, produce drugs to treat that disease. So you can address that unmet medical need. So I spent quite a bit of time doing that. And also what happens, Joe, is that we're very fortunate. New York is sort of a crossroads kind of place where, because it's also the place where you can find money to fund many businesses. There's obviously many companies that come to New York in search of capital, right? So it's great that we're located here, and we have, now every week, a dozen meetings with companies, biotech companies that are looking for funding for their clinical trials. So, we are constantly meeting with many of these management teams, the CEO, the chief medical officer, CFO of these companies, and trying to hear their story. What do they have that is so interesting, so unique? And also being very skeptical, because, you need to realize that of about 10 things that start human clinical trials, only one gets approved by FDA, so 9 fail. It's an industry which, I always say that it's really incredible when you look at the entrepreneurship that exists in biotechnology and life sciences, because imagine an industry where you spend hundreds of millions of dollars to figure out if what you are working on works or doesn't work, and you have a chance of 1 in 10 of it working, and it takes often 3, 5, 10 years to get the answer of whether it works or it doesn't work, and many don't. So the tenacity of these entrepreneurs in this industry is just remarkable. And so anyway, we meet with a lot of them to try to understand whether it's something we want to get involved in. And then it's just running the business, meeting with the team that I have to look at the different projects and look at what they're working on, and then often have like we're organized where we have teams that are focused on therapeutic areas. So there's a team that would follow oncology, cancer, another team that would follow metabolic diseases, and it's obviously people that have specialties. So meeting with them and looking at the projects, and obviously many projects we discard. We looked at something like 240 potential investments last year, and we did 9 investments of 240. So we're very strict, but so then we have to go through all of this process of analyzing all of these potential investments and discarding the ones that don't make the cut, and then focusing on the ones that we're very excited and trying to make sure that we can actually close a deal, where we're going to fund a product to help the company bring it, to humans eventually and treat a disease.
Yeah, it's great, and I'm glad you mentioned New York. Here on Long Island, and the students should really even understand this, which many people don't. We have this entire corridor that starts with Brookhaven National Lab, which is now getting the electron-ion collider out there. You have Stony Brook University along the spine, the Long Island Innovation Park in Hauppauge, which has 1,500 companies, most of them being biopharma companies, and then Cold Spring Harbor Lab, all right here on Long Island, right? And so it's everybody in Silicon Valley and Cambridge gets their props, but New York is no slouch in this area. So I'm really glad that you brought that up.
The point I was making is it's really amazing the quality and the quantity of life sciences research that takes place in New York with this universities that we mentioned, Columbia, NYU, and others, Stony Brook, but then also the research institutions like Cold Springs and and others, Rockefeller, and it's an incredible asset that New York has. And there's been important projects led by by, I think it was Bloomberg who started this, really trying to focus, put attention on, this incredible asset and knowledge that New York has that is maybe not as well understood. Why is it important? Because, for a long time, there were not many biotech companies that would actually locate and set up in New York. They would do it in other places, in Boston and other areas. But that has started to change. And there are many biotech companies that are now locating in New York because of the incredible research that is taking place in this area.
Yeah, I've watched it. I've been practicing here for 30 years. I've watched that evolution, and it's super, super exciting. I want to turn a little bit. So you mentioned earlier two points about failure, right? One is that you had some failures, but you learned from them, and that two is that your fear of failure is what sort of propelled you into AAA plus mode to not to make sure that you succeed. But I think that every great business person I've ever known has had failures and have learned from them and been able to pivot and grow. So just talk, especially so students understand that nobody's on a trajectory where there's no setbacks. Just talk about some of those experiences in your career.
Sure. Yes, I think you learn a lot more from the failures than anything else in life, and maybe things that can illustrate this. So I started the business, and as I mentioned, wanted really to open up the market of academic royalties, because I knew there were a lot of royalties in the hands of academic institutions that I could potentially acquire and do it in a win-win way, where these institutions could use that capital in very productive ways. And I tried a couple of times, to buy this royalty that Memorial Sloan Kettering had in this product called Nubogen, filgrastim, which stimulates white blood cells. It just failed miserably, and failed because we had a very high cost of capital. When I started Royalty Pharma, this was so novel that my investors, which gave me money, it was equity, were obviously expecting high returns. And the high returns were forcing me to actually, when I was valuing that royalty, use a very high discount rate. So the value of the asset was low because of the high discount rate, so that I could then, deliver a high return to my investors. And, I tried a couple of times to actually, went to MSK, met with them. They gave me, under confidentiality, the license for that product. I made an offer, and they said, no, the price you're offering is very low. And had tried again, failed again. And, every time that we faced, a failure like this or others, what we do with the team is try to get together and just, very openly discuss, what was the issue? Why couldn't we succeed? What could we have done better to actually succeed? And, sort of do a little post-mortem of the situation. And learn from our mistakes. And failures come in many ways. So, for example, in our case, some of the failures have been, making an investment that just didn't work, that didn't pan out, where we lost money, and again, learn from those experiences. So it's actually the learning aspects of failure are really, really important. Going back to Memorial Sloan Kettering, what I realized was that I had to lower the cost of capital of our business. And I managed to do that after, many years assembling a diversified portfolio of royalties, and then starting to use not only equity, which is expensive, and equity investors, demand a high return, but also start to use debt capital as a source of funding the business. And that is much cheaper. Now, you can only use debt capital when you have a business that has revenue and it's diversified, because lenders lend against cash flow. They don't lend against other things. So it took us years to get to that position of having a diversified portfolio that was generating, significant revenue. And we started to use leverage, which lowered the cost of capital very dramatically. And that was the third time when I went and engaged with Memorial Sloan Kettering, and the CFO said to me, Pablo, this is the third time. This will be the last time. If you don't make an offer that's going to be attractive, I will never, have a conversation with you again. So we needed to make sure that it was going to be attractive, and we re-engaged with them, and actually managed to make that investment. Now, what that did for us, which was really extraordinary, is that, once I was able to do that deal with Memorial Sloan Kettering, is that it really opened up the market of other academic royalties to us. And we were able to then go and do transactions with, many other academic institutions all around the country to continue to make investments and again, do it in a win-win situation with them.
Yeah, it's a great story because the failure, your persistence, and then you got that flagship account that gave you the credibility necessary to do the rollout to other organizations. So it's really a great tribute to persistence and not letting failure stop you, right? So that's exactly the point there. Just for a time check, Pablo, we're about 11 minutes past 7. I have 2 more questions, and then we'll see where we're at from a time perspective and see if we can squeeze in a couple of more. But these are important questions, I think. One is what's the future that you see of biopharma? What's the future you see for your company? What are the goals? Where do you think we are post-COVID? How has it changed everything? Right, that's a big discussion that's on people's minds right now.
Sure, yeah, those are super interesting topics. So in terms of the future of life sciences, I think it's as bright as ever. We've never been in a situation in life sciences, and this has been evolving. Obviously, it's been happening over the last 5-10 years, where there's so much excitement about the innovation that is occurring right now in life sciences because of all of the discoveries that have been made over the last decades, and so we're really at an incredible point in time in life sciences. And what's also happening, Joe, which is fascinating, is that there's a convergence of technology and biology, right? Like these 2 fields are converging in many ways. So a lot of the solutions in human health are going to be not only drugs, biopharmaceuticals, but it can be devices, and it can be things that are going to combine, a biopharmaceutical product with a diagnostic. So you have, as I said, this convergence of biology and technology. So that's why there's also an opportunity for, even people that might not have a background in biology or chemistry or but can come at it from a technology angle. So we're in an incredible time period. Why is this happening? I'll give you some statistics that might provide some perspective here. So if you look at the investment in R&D in life sciences, it's about $300 billion per year invested in R&D in life sciences. About 200 billion is invested by companies. This is global, and this is basically pharma and biotech companies that invest about $200 billion per year, and it's growing. Every year it grows. And then you have another 100 billion invested by governments in the US, in Europe, in Asia. And this is governments that give money to things like NIH in the US or Weizmann in Israel or Karolinska in Sweden. So, and then, those institutions do research, but also, fund research across, universities and research hospitals. So $100 billion invested per year by governments and foundations, and that money going into academia and research hospitals. And all of that grows. if you look at other industries, Joe, like take cell phones or computers, or, there's very few industries around the world that invest in the hundreds of billions of dollars per year. Life sciences is one of them. Many others invest in the tens of billions of dollars. So it's one of the biggest drivers, life sciences, of funding of research, funding of innovation. And all of that is going to just, pay off over decades, right? And I was talking to you about the fact that when we look at humans and diseases that have been described, that have been, described in humans, it's 30,000 or so, and we have cures for very few, 20% of them. So the room for us to continue to innovate and improve human health is very significant. There's other drivers that make life sciences a very exciting ecosystem. And I always talk about 4 drivers. So you have population growth that drives growth in life sciences. You have aging of population. So if populations age, people get sicker and they need, healthcare. You have another very important phenomenon, which is growth of incomes all around the world. So if you look, maybe when I started Royal Pharma 25 years ago, the regions of the world that really mattered when you looked at the healthcare industry were really about 1 billion people around the planet, which was the US and European populations. Those were the countries, the regions where incomes were high enough and people were, sort of relevant for healthcare. And 6 billion people, in Asia and Latin America, maybe the incomes were not high enough, and they really didn't, demand a lot of healthcare. They did, but they couldn't pay for it. But what has happened over the last, I would say 20 years or so, is that as incomes have risen in China and India, in Latin America, those regions of the world have become really important. And you see double-digit growth in demand for, medicines, for other healthcare, in those regions of the world. So that's the third really important driver of innovation. And then the last one is innovation. And what I mean by this is take a look, for example, at cardiovascular disease and statins. So, drugs to treat high cholesterol were big drugs. When Lipitor was invented and all of the other statins, that became a $40 billion market, huge market, and it grew from nothing to 40 billion over 10, 15, 20 years. Now those drugs now they lost their patent protection, and now generics have come in, and that whole market has declined dramatically. Why? Because generics are sold for pennies. A drug, when they go from being patent protected to losing their patent, loses 80-90% of the sales the first year. So they really drop like a stone. So that market sort of disappeared, and those drugs now are used by humans at much cheaper cost and benefit human, because there's all of this discussion about high prices of drugs. But what a lot of people don't realize is that once the patent expires, those drugs are benefiting human health and cost very little money.
Right.
But anyway, what happens is over and over again, as science progresses and advances, you have new areas where you can now develop drugs. And, for example, there's now incredible gene therapies that are making diseases that were not treatable before treatable, where, spinal muscular atrophy, kids that were born in the past with SMA couldn't walk. And now through a gene therapy, you change the gene that causes the problem, and these kids end up walking, which is an incredible advancement in human health. But that is a totally new field, and that will become a multi-billion-dollar space or therapeutic class in 5 or 10 years, and that will replace the fact that statins, So anyway, innovation drives growth in life sciences. So it's a very, very exciting time for this field. And you were talking about, the future of my business, Royalty Pharma. And I'm very excited because we've created a business that is in the middle of this R&D ecosystem. And I'm trying to make Royalty Pharma as the partner of choice to partner with, academic institutions that want to monetize a royalty, a hospital, a university, foundations. We bought royalties from the Cystic Fibrosis Foundation for a huge amount of money upfront. We paid them $3 billion for their royalties in these drugs that now have made cystic fibrosis a disease where kids that get on these drugs don't decline. Their lung function stabilizes completely, and some of them gain lung function. So it's become, they're disease-modifying drugs, and it has, kids that had cystic fibrosis would have a life expectancy of 20, 30 years before. And now the belief is that these kids are going to have a normal life. Anyway, so the amazing innovation. But the Cystic Fibrosis Foundation funded that research, and they ended up with a royalty that we acquired. But I'm very excited about the prospect for our business, because if we can stay relevant and find ways to partner with all of these different partners, in life sciences, the biotech companies, the big pharmas, and fund the research, we can actually, grow and do things that are exciting for us, but also are gonna, contribute to human health, which is another thing that I find, what I tell my team, all of the work that you do every day is relevant. And you should realize that if we fund this drug and it works, you actually contributed to curing a disease that maybe in the past was not treatable. And that's just such an incredible feeling and excitement. So I'm very excited about the future of our business. And it's all about, constantly changing, staying ahead of the curve, and trying to figure out what are going to be the therapeutic areas that are going to matter in the next 5 to 10 years, and how can we get involved in that? How can we fund that? So it's very exciting times.
Yeah, and you mentioned something I want to just make sure we put a fine point on. So much criticism about the high cost of drugs, yet hundreds of billions of dollars of research goes to waste when it doesn't work. And who's going to invest? Who's going to take that risk unless they can make some sort of profit, which they're then going to reinvest into trying to come up with a new drug? I mean, it's really a shame that politics makes that an issue and doesn't just let capitalism work the way it's supposed to work to be advancing human health.
You're so right. And you were asking about COVID before, and the one thing that COVID has done is that it has really put medical research in the spotlight, because now everyone understands how important this is, how these vaccines that were developed in record time are going to potentially, hopefully, in the very near term, bring things back to normalcy. And it really has shown how the pharma industry, the biotech industry, and even academic research, can really make a difference in an incredible way. So I think it has really changed the conversation about what life sciences research does for all of us. We're gonna face. I mean, this is a challenge that hit us very suddenly, but these things will continue, unfortunately, and we're gonna have to stay ahead of the curve to make sure that people can go back to normal and have a normal life.
Yeah, it's a great point. For my generation, polio is not a reality because the vaccine was there when I was born, but it took 13 years, right, to get that vaccine. Here, in 13 months, we're able to be vaccinating a large part of the global population. So super exciting and super important work. We a few minutes left, Pablo, and the last question I want to ask is, for the 220 students that have been watching you and excited to hear what you have to say, what advice do you have for them? What advice do you have for them as they are getting ready to go out and conquer the world?
So I've always been a big believer that you have to dream big. And the reason I think that is really important is because as humans, we can only go as far as our dreams, right? That's really And often we don't get there, but you have to try and try and try, because if we don't dream big, then there's no motivation for us to achieve things. So dream big. The other thing, there's a few other things, but one is to be very curious about things, and that's one thing that I really owe to my father. He was a very curious person, really always asking every possible question about everything that he faced in life. And curiosity is really critical, because problems are always very difficult to solve, but if we remain curious, we can always or try to find solutions to problems, and innovate. And the only way you innovate and change things is by being curious and really having this mentality of not giving up. I mean, people always tell me that I'm just relentless. I just I don't take no for an answer. When we fail, I always say, there must be a way of doing this. There must be a way of solving this problem, or persuading this person to do what we think should be done. So that's another thing. And a few other things is I owe this to a friend and mentor and partner, Rory Riggs, who was chairman of Royalty Pharma for many years. And he always said to me, Pablo, look around you and try to see what are best business practices. What are the best companies doing in this specific role or this specific activity? And you have to do exactly what the best companies are doing in everything that we do, or try to even do better. So really thinking of what are best business practices and how can you actually run a business and build a business, because this is all a process. You start with something small. It takes a long time. I mean, I always tell my colleagues, there's so many things that have to fall in place for you to succeed. And there's one or two things that can derail you. So you have to always, think of everything and try to make sure that you have like a plan B or a plan C for the things that actually might not work. So all best business practices, being relentless, not giving up, and trying and eventually succeeding is really critical. So I think those are really important things. But then a few other things that are critical. One is values and culture and honesty and integrity. So I think what I also tell my colleagues at Royalty Pharma is we have to run our lives and our business with a very high level of integrity, and being very honest about everything. If we don't like things, speak up. If there's better ways of doing things, speak up. And values. Why are we doing what we're doing? Try to have a purpose. Like, I love, the Haas School of Business has 4, ideas that I think are really extraordinary. Scholars ever, it goes something like that. But they also, beyond ourselves or beyond yourself, try to do things not only for yourself, but beyond ourselves, for, our community. And because if we do that, then, there's a purpose for, things for life, right? And there's also, and it's much more rewarding when you can see that whatever you're doing is also gonna change, things, solve a problem, and help, other people, help humans. So all of those things are things that I think are really, really critical in everything we do every day, and in our personal lives and in our business. And I think the other thing, that I think is critical, and it's the area where it's always a struggle, like family, right? Like, paying attention to your family, wife, kids, making sure, like I look back and I say, I had incredible parents that I owe so much to them of what I've been able to achieve because of the values and the culture. And I've tried, and myself and my wife with our kids to make sure that they grow up to be, people of good and people that are going to do things that are important in their lives. And I think, so far, I look at them and I say, you know, they're just great kids, and I'm so proud of them. You know, one of them actually will be probably applying to business school soon. So, but you know, just you know, being very open with them and you know, having a great relationship with them is critical. But anyway, maybe I extended myself too much. And
That's listen, it's all great stuff, and we just hit the marker at the end of the time. And Pablo, I'll tell you, I've been doing this a long time, and you know, one of the challenges of COVID and doing this over Zoom is it's really anticlimactic to come to the end of this discussion without a live audience that would give you such a rousing round of applause. I mean, you're a genius. You're a humanitarian. You have really used your life to prove that capitalism works, and it can work to better all humanity. And to have spent this limited amount of time with you, I am sure has affected every student and faculty member that's gotten the chance to hear from you. It's affected me, and it's really been a remarkable journey. And I'm proud to have gotten to know you and to spend some time with you. You're doing tremendously good work, and we respect that, and we commend that. And I want you to understand how disappointing it is that I can't shake your hand live and really congratulate you in person. But it's a heartfelt sentiment, and we're so lucky that you spent your time with us, because this has been a really rewarding journey that is really something I'm going to remember for a very long time. It's been that eye-opening and important. So I want to thank you, Manny. I don't know if you want to jump on and say a few words, or if he's having a bottle.
No, not necessary, but thank you all very much. This was just fantastic. Super.
thank you for your very kind words, Joe, and also for the audience for listening. And I think you know, you're all in an incredible institution with a great program, and you know, I'm sure that there'll be very exciting opportunities for all of you in the years to come. And I hope that, you know, some of my experience will be useful to you in your careers. And, you know, I think what I would say, Joe, thank you for your kind words. But at the end, you know, what I am is really a facilitator of a team that has, you know, that we have at Royal Pharma that does incredible work every day, and, you know, just incredibly talented people. But thank you for the opportunity, and also to Jim, who organized or who facilitated this. And maybe, you know, at some point in the near future, come to Stony Brook again. I actually go to Long Island, to Sag Harbor, you know, where we have a home for the weekend. So it's on my way out, and it would be fun to come in person. And it is a shame that this is not in person, and, you know, with the audience, live audience, which is always, you know, more interesting. But, you know, there will be time for that in the near term. But thank you very much for the invitation.
Yep, and you know what? It's people like you who have helped create these vaccines that is going to make sure that we will be together live very, very soon. So Pablo, thank you once again tremendously for your gracious time. We really, really appreciate it.
Thanks to
Thank
both of you.
Bye.